Hello, everybody. This is Chuck Carnevale, co-founder of FastGraphs, the fundamentals analyzer software tool. And I want to thank you for joining me today. This is my third in a series of tutorial videos, if you will, where I'm attempting to provide subscribers some better insights into how to get the maximum benefit and use out of their FastGraphs subscriptions. In part one, I covered the historical graphs. In part two, I took a look at forecasting. And now in this part three, I'm going to be looking at fund graphs, which is an acronym for financial underlying numbers. When we originally developed fast graphs, and we did it for our own benefit and use, by the way, until we finally got smart and decided to share it with the public because we knew it could help so many people. We wanted something that was fast. I hated poring over financial statements. I hated looking at spreadsheets. I just didn't find that stuff any fun, but yet I considered it critically important as far as a proper research and due diligence process. I think knowledge is power, and the more I could know about the stocks that I wanted to invest in, the better investor I could be. So ultimately, fast graphs were developed to make it faster. We produce essential fundamentals at a glance. We do it graphically. There's so much information that you can just glean in an instant by looking at a fast graph, as I'm sure many of you also agree and know. But the other side was we also wanted it to be more enjoyable, more pleasant. You didn't have to go through all that tedious effort of going through financial statement after financial statement, year after year. Everything was kind of just delivered to you, as I said, essential fundamentals at a glance. Now, in the first couple of seminars, I did the historical graph. And the key here is this with the historical graph. And this is, I think, very important to add here. This tells me an awful lot about the business. I can look at Bristol-Myers here and I can see a period of relatively flat or low growth. Then I see the stock price get disconnected from the earnings. The orange line, of course, is the earnings of the stock. I see it revert back to the mean and come back into fair value territory. But the point is, right now, I see Bristol-Myers as a company that has some accelerated growth potential. That's partially a result of the Celgene merger that the company did, which I'll be talking about from time to time in this video. But I can now buy this stock where it's below the orange line. In other words, it's at a very attractive valuation relative to historical norms and relative to its future growth rate. So that gives me the incentive to say, I really want to know more about Bristol-Myers Squibb. Now, looking at it, the company currently trades at a blended PE ratio of 10.79. It has an earnings yield of 9.27%. I love that. I like at least 6.5 or 7. It doesn't seem worth it to me to invest in a stock if you don't expect to make more than 6.5 or 7%, which is sort of within the range of the average return stocks have delivered. The dividend yield is over 3%. I really like that. The company's A+ rated, has 44% long-term debt to capital. So these are all attributes that tell me, hey, learn more about this company. So from there, I'm going to then decide to look under the hood and look a little deeper at the companies while still looking at fundamentals. However, before I do that, keep in mind that I will go through all of these other metrics that the Fast Graphs tool offers. I'll look at owner's earnings, basic earnings, diluted earnings. I'll look at operating and free cash flow, very important, especially for dividend-paying stocks. I'll look at EBITDA and EBIT, and then I'll even look at net change in working capital. Subscribers ask me all the time, Chuck, what's the best metric to use? My answer is all of them. You've got all of this resource at your fingertips that can be provided to you virtually instantaneously. Why not take advantage of it? That's the whole point of this research tool. But once I've done all that, I'll even look at dividends. I've got the dividend yield here at overlay. And what this allows me to do is look at the company's historical dividends versus the current level of the dividends. And when the dividend yields are the highest, those are always at periods of time when the company's stock price is lowest or the valuation is best. And when the dividend yields are on the low side of historical norms like we have now, that's during times when the stock price is at an attractive valuation. So I've done all this. Now it's time to dig deeper. In order for me to do that, I'm going to turn up here to fund graphs, which is our acronym for financial underlying numbers. It allows me to look a lot deeper at the company using several different metrics. I'm going to start out here by looking at what we call our per share graph. We have 4 primary features that are available to premium subscribers to Fast Graphs in the fund graphs. The first is the per share graph, where we look at some summary balance sheet information, cash flow information, and income statement information. So the basic financial reports of the company. Now, what I've got on the graph here right now is I've got long-term debt and total debt. And instantly, by looking at this graph, I see, holy cow, debt has gone up dramatically. Well, obviously, that's because of the Celgene merger and acquisition that the company did in 2019. So that changed things dramatically. If you recall, when I was showing you the historical fast graphs, the growth acceleration is there also as a result of that merger. So it starts to make sense. Now, by the way, with all of these graphs, you can also run shorter time frames, longer time frames, just like you can with the basic fast graph. The dynamic nature of the tool is very helpful. Now, what we do is we give you each of the annual metrics here. This is the annual version. We tell you what the compound annual growth rate has been, and we also tell you what the change per year has been, very similar to what you see on the fast graph. So I've got debt, long-term debt, and total debt. And as you saw there, most of the debt was long-term debt. I can also look at things like assets, very important things. How the assets? Well, clearly, Bristol-Myers assets increased dramatically as a result of that Celgene acquisition as well. I can also look at cash on hand. How much cash does the company have on a per share basis? And right now, through the February quarter of 2019, Bristol-Myers had $8.99 of cash. So I can go through, I can look at common equity or book value and all these other, items. I can erase everything by just double clicking it here, and then I can move on to the cash flow statement, for example. And I can look at dividends. I can look at dividends either declared or dividends paid. I can look both, or I can choose which one of those I want to look at. I can look at free cash flow relative to dividends to see if I've got free cash flow covering the dividends. In the case of Bristol-Myers, more recently, I definitely have free cash flow covering the dividends. So I like that. So I can go through the cash flow. I can look at, of course, operating cash flows and a lot of the other metrics that we saw on the basic fast graph. And then I can go through the income statement, and I can again look at some of the same things we saw. But one of the ones that I really like with this particular iteration is I want to look at revenue per share. Now, revenue per share is interesting, and it's different because I'm going to skip a couple of graphics here and move over onto the in millions graph, because in the in millions graph, and you'll notice it's bordered in red, so I know that it's the same balance sheet, cash flow, income statement data that I looked at in the brown per share graph, but here it's in millions of dollars. And what's interesting about this is if I'm looking at total revenues, I can determine whether actual revenues are increasing or whether or not financial engineering had something to do with that, because I've also got, as you can see here, common shares outstanding. And if the company's been buying back shares, now in the case of Bristol-Myers, they've actually issued some shares in 2019. They went from 1.6 billion shares to 1.7 billion shares. So they've actually issued, but they have bought some stock back in recent times. If I had IBM up here, you'd see a case where you had a significant buyback program going on over the last several years. And then if you checked revenues and revenues per share, you would see what I mean about why these things are different. But again, I can look at it in total numbers. I looked at cash per share on the per share data, but here I'm looking at total cash. And let me get rid of the cash flow number here because it's covering up the cash. And here I see that the company has 15.49 billion. Now, by the way, I can also look at this data quarterly. I can look at about the last 10 quarters, so I can drill down a little deeper and look at, whether the company's cash. Now, over the 2019, their cash actually fell from 29 billion down to 18 billion, which is what they currently have more recently. So I've got all this financial horsepower available at my fingertips. Now, the other two primary graphing tools that you have with fund graphs is we've got the ratios graph. The ratios graphs are very interesting for several things. Like, for example, I've got long-term debt to capital and long-term debt to equity here. So I can look at some core or basic financial ratios. When I'm analyzing a stock, I also like to look at other liquidity ratios. For example, I like to look at the current ratio, and I also like to look at the quick ratio. In the case of the current ratio, I'm looking for a current ratio above 1, and you'll notice Bristol-Myers has a current ratio of 1.6. So that tells me the company's, very solid. They can meet all of their short-term obligations. But then in addition, under this same metric here, I also have numerous valuation ratios. For example, I can again look at price to earnings, I can look at price to book value, I can look at price to cash flow, and I can also look at the all-important price to sales, which is another valuation tool that I really personally think makes a great sense to look at, because book value matters to some companies, it doesn't to others, but price to sales just lets me know whether I'm paying for the reasonable multiple for the company's, current sale. It's a great valuation tool as far as I'm concerned. And then if I move on into the percentage graph here, which is bordered in blue, I've got some other very, very important metrics that I can utilize to make very important decisions about whether I think a company is the type of business that I might want to be investing in. Right now, I've got gross and net profit margin. You can see a company like Bristol Myers generates very, very high gross margins. Their net profit margins are obviously low, but still attractive in the 20% to 18 to 10%-ish range. So you can see how the net profit margin has changed over the years. And again, you can do that instantaneously with fast graphs. That's one of the real great benefits. I can also look at things like returns on assets, and I'll go ahead and take the margins off here so you can see that. I can look at returns on equity. I can look at both of them together. By the way, I can also run these as a line graph. If you don't like, the bar graphs, you can also then run it, pick this spot up here and run it as a line graph. And sometimes, depending on what data items you might be comparing, the line graphs give you a little bit better insight. Most of the time I use the bar graphs. I can also look at some of these things logarithmically, which is very, very important. So anyway, this is the FUN graphs. It stands for Financial Underlying Numbers. These are available to the premium subscription to Fast Graphs, and they really can help you make better long-term investment decisions because you can really understand the financial makeup of the business. Now, you've also got several other features on Fast Graphs. For example, you can go into other websites and look at more, research. You can go in. One of the ones I think is very important, you can also go directly into the company's corporate website. And I think that's really critical. You can go in and look at the company and, of course, go to their investors section. You can look at their financials even more deeply here than what I showed you with the FUN graphs, etc. But the whole idea of our tool is to make researching stocks fast as well as fun. So I hope you got something out of this video. I hope you learned a little bit more about how you could utilize the FUN graphs. Keep in mind, I've only skimmed the surface here of all the other features that are built into the FUN graph part of the tool. But anyway, I hope you enjoyed this. If you like it, don't forget to ring the bell, give me a like, and hit the subscribe button. I'll be coming back with my next featured video on portfolios, how to get the maximum utilization out of the portfolio features of Fast Graphs. Thanks for watching. I look forward to the next video.